And actually, what's her name from CNBC asked me the most relevant question, which is, are you going to take this back if it doesn't pan out? And he dodged it totally, which I thought shows really, I'm sorry to say it. He may understand what they put in front of him, but he has no understanding of markets and what's going on. And it's, again, we can go to the Powell pivot. It doesn't matter. It doesn't matter. We just have to deal with what we're given, but he did miss an opportunity. So
1 second. You just got the reversal down on the 100 by 3, guys. That confirms that high. Okay? All right, go ahead. Sorry.
Okay. No, don't apologize. Okay. So what do I think happened there? And I'm going to tell you this. Everybody in this room knows I put out that blog 3 weeks ago saying that they should have done this. Now you could say, well, they had to wait. No, they didn't. They missed what they were at, and they were going to come and do it anyway. But the G7 was just a cover. There was no way, although I was, after the Aussies went, see, I thought for sure this would happen if the Aussies didn't go. But then somebody said to me, well, they went because they knew the U.S. was coming with 50. Maybe. I don't know for a fact. But the Aussies did go last night, and that may have prompted the U.S. to go, yeah, we better do this, especially when you saw the Aussie, and the Aussie dollar is still higher. But I believe that the G7 met, and the real discussion was about the dollar. That's just my conjecture. But this morning, the dollar was rallying back, the euro, because nothing was, quote unquote, done at the G7. And then we saw what happened right after the G7, right after the Fed did this, the dollar, of course, came off. And I think that has to be the concern for a group like the G7 is the dollar. And I think that it's missing from a lot of the discussion, because a strengthening dollar, especially for the emerging markets, is not good and puts more stress on the international economy. And you can say, well, the Fed only worries about the U.S. economy. Well, that's not true, because Richard Clarida spent last year writing papers and delivering papers about the more international aspects of the Fed policy. So that's not true. Now, they're not going to be happy right now with that the dollar has, as Judd just pointed out, has come back a little bit. And it's mind-boggling that the market's going to push them farther, because these curves, which is also going into this discussion, the yield curves, have initially steepened but are now coming back flat. So they're going to have to take a really good hard look at this and going, huh? We thought we were getting a little bit ahead of it. Not so sure. I thought the gold absolutely performed to what it was supposed to do. And don't get bogged down in this inflation, deflation, because everybody wants to think they know the way this plays out. Those who are looking for a supply shock are, of course, looking for a short-term inflation hit, which is what's putting a bid to the tips. Others, I'm in the camp of the second, that the most paramount outcome of this is going to be a demand shock, which will be somewhat deflationary, or the threat. Let me put it that way: the threat of deflation. And now the central banks are absolutely in a position that they've never wanted to be as a group, which is trying to combat a fear of global deflation. Because don't forget, when the Japanese underwent deflation, the rest of the world economy was growing pretty well. The same thing with China. When there were impacts, to deflationary potential, the world economy was growing pretty well. And when the great financial crisis of 07, 08, and part of 09 was set in motion, the Chinese had the ability and the capacity to ramp up their economy, which removed some of the downward pressure on prices and output. So you've always had a backstop. Now you could say the U.S. is a backstop. I don't think so, because the United States is not going into this. If this demand shock occurs, the United States is not going into this with a strong hand. And I go back to the discussion I had last Thursday, because of the huge amount of debt that's being carried, public, private, financial and non-financial. There's a lot of debt on the books. Yes, the consumer is in better shape than they were during the housing crisis, but there's a lot of people who that's not true, because the amount of credit card debt has grown, auto debt has grown, we know student debt has grown. So there is a lot more out there than people think. And what is the real fears of the demand shock? It's what we talked about the other day, is that unemployment would ramp up quickly. If unemployment in the United States jumps quickly, and I'm talking about a move from 3.5 maybe to 5.5, which, don't forget, it was only 8-9 years ago that the Fed told us that 5.5 was full unemployment, which we know that's not true. They moved that as goalposts, because first their number started at 6.5, or maybe even 7, 6.5, 6, 5.5. So we've seen all kinds of moving of the proverbial goalposts. So that's the environment that we exist in. I think watching the dollar here is very, very important, because I think that's what the G7 meeting was about. So we can take off any conversation from there.
All right. So just to give everybody a little technical thing here, we came down to close enough to the next support level in the S&Ps. I showed you that area on the 100 by 3. So, it's going to be all over the place all day. And it's how it winds up the day. I showed you the 100 by 3 in the gold, and that went to perfect resistance. So you have to let that reset. You just can't go trade it. Ira, you want me to pull up a dollar chart or the dollar index, or which one you want me to do?
You could, yeah, whatever. I mean, you're going to get the general picture anyway. The dollar index will give for those who need a more overall picture.
Okay, hang on a second. I'll pull it in. Yeah, and we're, it's really nowhere down in here as far as trade location goes. It's back under the 50 and 200 DMA.
But that's what this target has to be, because it doesn't make any other sense. And you know what? The rest of like Lagarde was adamant. The ECB was not going to partake in this. Now, of course, the G7 is not the ECB, by the way. Let's see who's in it. It's Canada, Italy, France, Germany, Britain, Japan, and the U.S., right? Is that the 7? Yes. So to hold the G7 was a joke and a half anyway. Why didn't you hold the G20 meeting where there were a lot more participants and seems to carry more weight? Do I really care what Italy thinks? No. Do I care what Canada thinks? No. By the way, Canada has a meeting tomorrow and they're expected to cut, which would make perfect sense seeing what the United States did. So Canada, Italy, the UK, we certainly really don't give a crap about it this time as they're trying to sort through Brexit. France, on any good day, I care very little about what goes on in France. Germany, but Germany can't decide by itself anyway, so the ECB really talking for Germany, and the United States and Japan. And Japan, we already know what they thought. So this was purposeless unless it was directed about the dollar. And they wanted the basically not of agreement going, we're basically going to try to target the dollar here. Please bear with us. And if they all had a collective brain, and if they had a collective thought process, it would be, yeah, we understand that. We actually think that's a good idea. We're willing to take some stronger currencies here in an effort to keep the pressure off especially off the emerging markets who have a lot of dollar-denominated debt. So, I mean, that's the way I see it. Am I right? I don't know. But that's certainly the way I'm going to look to trade this, and not immediately. Because, again, what's the impact? And this is exactly what we've talked about. When we were looking for this, we said be patient, because whatever happens, it's going to be in the 48 hours after it. So right now, the S&P's had a very sizable rally, and now we're down 24 handles, 25 handles. So the market's suggesting it, trying to understand that, which took place. The most interesting to me of all is the March Fed funds contract, which is now the lead Fed contract, but it's the second day of the month. It's up 25 basis points. We're at 98, 96. That's a 1.04 average fund yield for the month of March. Now, you already had one day yesterday in which it was at, let's say, 145 or 155. And the official Fed run. So now you have, you can count the days and you can figure this out. So let's see. They may be looking for another cut at the next meeting. Pay attention to that Fed funds contract, the March. Because the March is up the most. So
I got it.
just for the record, that's $1,000 per contract move today, basically, with maybe an $80 contract risk. So it's a pretty good risk reward ratio.
Yeah, it was interesting to me that the first thing that moved this morning was the Italians that went straight up on that ridiculous G7 statement. Right.
And it was ridiculous. That statement was, ridiculous. So that really, and I'm an imbecile for really not being along the Fed funds contract, because when I read that statement, I said, they didn't go through this effort to come up with this statement. So my sense was, now I was long some metals off of it, silver and gold, because we'll talk about the silver in a minute. I'm going to give you a look into my dark side of my mind, as I call it. Very dark. I'm going to go very dark here, pure conjecture, but I'll get there in a minute. And then that's the last thing we're going to talk about, because I'm going to blog about it tonight. So when I saw the ridiculousness of that statement, I said, really? I said, but what they didn't say is anything about the dollar directly, but my sense was that they just didn't do this, for, what do we call that, shits and grins? No. So they wanted to get the okay on the dollar. Right now, if the dollar really doesn't start to sell off more dramatically, then I watch the Fed funds, the March Fed funds contract, and go, are they going to look for more? Because this wasn't enough yet. The peso tried to the peso's actually performed okay. Where's the ruble at? Doing that's actually pretty good. Let's go look at the Bloomberg Commodity Index. Yeah, it's up. The BCOM.
Yeah.
These are all critical components to this whole thing, as far as I'm concerned, because they have been, will be, because they really reflect economic outcomes. Okay. Any questions for me? Again, I'm not saying I'm correct about it. This is what I'm gleaming from watching the markets. That's all. This is all just from gleaming from watching the markets.
Ira's podcast is on financial repression, so you can get to. We'll post that for you later.
Hold on one second. Hold on.
You had a lot of matches today. You had everything went basically did a 50% rally. You had a 50% rally off the low back to for the last week in the S&Ps. Failed. Oil failed.
Paul? Janice will be here in a minute. Okay. Yeah, I'll be down in a minute. Okay, let me finish up here. Okay, so here's where I'm going to end this. Okay, and I want you to think about it. Yesterday there was a piece out, and all the noise, things get lost. But I don't know whether anybody saw it. I don't know whether I sent it to you or not, Judd. The Swiss National Bank announced their situation for 2019. Anybody see that?
I missed that.
Anybody in the room?
Anybody else? I don't know. Angela checked out. I don't know.
Okay. I'm going to take you to the black side of my mind.
Okay.
So yesterday, the Swiss National Bank announced that they made almost $51 billion for 2019, powered, I'm reading, by a huge gain of foreign equity investments and a holding of more than 1,000 tons of gold.
Wow.
Okay? $50 billion. 51 billion. Now, let's analyze that, because how did they buy all that? That was the foreign equities that they owned. And we're talking about Apple, Amazon. They own significant stocks. They're like now, I think, the fourth largest holder of Apple stock. So they buy stock and they collect dividends, and they have all this going on. So they do this by printing Swiss francs. They're not taxing the Swiss people, not directly anyway, and not yet. And then selling those Swiss and buying foreign currency. This is in order to keep the upward pressure on the Swiss franc. And they buy equities. $51 billion. That's better than any hedge fund in the world as far as I'm concerned, because they don't even have to go out and raise money, and there's no disclosure documents. So they made $51 billion. So I was sitting with some people, and we were talking about the inability of silver to perform. Now, everything I'm saying here is just pure nonsense that goes in my mind. But sometimes some of that nonsense bears out. So these guys had been long silver and disappointed, and we were talking about it. They said, well, what would take it? Because they watch it, and if you watch the silver trade, it trades more as a industrial metal than it does as a precious metal. It's just a fact, and why? I don't know why the algorithms have it so tied in as an industrial metal, especially because photography is gone. So it's really, and maybe nobody, it's always been called the poor man's gold. So my thought process, I said to these guys, let me take you to the very dark recesses of my mind. And they go, what's that? I said, well, if I ran the Swiss National Bank, I would be taking some of my equity gains off the table. And if I raised $5 or $10 billion, and this is all on gains, I would actually go put it into some harder assets. I'm not going to buy artwork, although I could. I'm not going to buy automobiles, although I could. I already have 1,000 tons of gold, according to the article that came out yesterday, and I'm pretty sure that's right. Maybe I should start monetizing silver, because the question was, who do you think would actually act to monetize silver? Because, let's face it, gold is monetized, whether the central authorities of the world like it or not. Some like it. The Chinese and Russians and a few other central banks certainly have a gleam in their eye about some type of monetization at some point of gold back into the international monetary system, unless cryptocurrencies take over everything. But you may wind up with cryptocurrencies actually backed by gold. But that's discussion for over a few drinks when we can really let our minds go. But the Chinese have a history, of course, of monetizing silver. They were on the silver standard before they were on before the gold standard, and that's how the Brits actually crushed the Chinese finances in the 1800s with the Opium War and the Boxer Rebellion by really forcing a depreciation of silver. So it's just fun to think of this and pay attention, because with everything that's going on in the world, the fact that we're sitting up at 96 ounces of silver to an ounce of gold, when everybody's running for all kinds of asset classes. We've seen what artwork has done. We've seen what automobiles have done. We a whole litany of wines. Is silver going to be monetized? It's worth watching, because at these valuations, somebody may move to do it. And I said, if I ran the Swiss National Bank, again, I'm going as dark as I can into my deepest dark recesses, I would be selling stocks there and absolutely moving more into precious metals. So let's watch it and pay attention, and let the machinations of the charts tell us when things are starting to change. But just fun things to play with. But the most important part of this conversation today is watch the dollar, watch the currency markets, because I think this has a lot to do with what went on this morning at the G7.
Okay.
Any other questions? Yeah.
No, I put up the 100 by 3 in the silver. Hasn't turned up yet,
Yeah.
even with this big rally today off the low.
Right.
And we're up at.
It looks like crap. That's why I'm saying you don't jump in.
Yeah, and I got gold silver up on the semi-annual here too.
Yeah.
So you can take a look.
It's worth watching.
Yeah, it's definitely worth watching. And top of value in the gold was 46. So.
Yeah. Yeah, and the price of silver options, the vol is always high. You pay, it's like one of the highest premium prices. So you can watch it, but it's just something to pay attention to in this world of craziness. Because as we're watching this again, we see what the equity markets have kind of settled down. After what we've been through for the previous 3 weeks, anything that's only 80 handles in the S&P is like a calm day now, right? We've all been battle tested. What we thought was insanity has now proven to be just another walk in the park. And now the boundaries at the extremes have been so stretched that our ability to adapt has grown with it, and so we're used to much now. As I started this conversation, the euro currency is back higher on the day. The Swiss is hanging in there. The yen set a pretty good bid. Canada's down, but that's, again, we're going to see the Canadian bank tomorrow. It's just going to be how big are they going to cut? Because you see the Aussie cut 50 basis, and yet the Aussie's up 70 ticks. So if you can do some work on the I'm actually going to look at the Canada today. I have no position. I've not done anything with it, but I am going to be vigilant about it. And again, keep that March Fed funds in your focus, because you think about that move today. And yesterday, of course, but it's way past the previous highs that have been made. And it does get interesting here. But this is, make no mistake, this is about the dollar.
Okay.
Oh, wait. I have a new name for Donald Trump too. And it's not like your incendiary name. My nickname for him is now Otter.
Otter? Oh yeah.
Otter. Why Otter?
Animal House.
Animal House. That's right. Because every time I listen to him now, it's like when Otter goes, "We're not going to sit here and watch you denigrate our country." He just walks out. So he's like Otter, and I don't mean that. I just mean that in a pure comedic sense. There's nothing derision. There's no derision to it. It's what he's like. It's Animal House. I'm not gonna sit here and let you denigrate this great country.
Oh God.
Everything comes out of Animal House. Everybody, like Mnuchin yesterday, going, and Kudlow. It's like, what's his name? I love that, the scene when everybody's running him over at the end and everybody's running. There's nothing to fear. There's nothing going on.
These guys are unbelievable.
I can't help it. Again, I'm in my dark. They've forced me to the dark side. And today, going to get a cup of coffee right when they cut the rate was enough to throw me over the edge. All right, that's where I'd point to out of this. You can do with it as you like. Tonight, hopefully I'm gonna get a blog out about the Swiss National Bank, because that is a very important area, and nobody pays attention. 50 billion,
Yeah,
and they distribute that. They distribute some of that to the cantons. That's how they do that in Switzerland. That's under Swiss law. Yeah, I'm sorry. One last thing.
On this Apple here around 291, is if they can
Yeah.
break that on a closing basis, they're going to dump Apple for about $12.
Yeah, I don't know. Judd, that's not my strength. You guys are much better at doing the individual stock analysis, and I applaud you and I appreciate it.
I mean,
Not where I'm going, so yeah. May well be. I have nothing with it, so I will defer to you guys.
Okay.
But hey, I'm just giving you. I truly think that dollar issue is paramount there, because nothing else fits why this was done. And I didn't hear Trump was just out talking about the currency, I guess. But I feel pretty good. Everybody should have been set up. Not that you could have caught this and anticipated it directly, but I have to go back. The hardest part about writing a blog is going back and rereading and going, shit, am I a bad trader? But so it goes. It's the pain of the business.
Yeah. Well, we all want to be as bad a trader as you are.
Well, you know what? I hope everybody holds themselves to that exacting a standard in which you expect from yourself, because that's what all the preparation is about, is holding yourself to that standard. That doesn't mean that you denigrate yourself. No, but my expectations, doing all this work leads to just higher expectations. You know that. It's not trying to glom something that like you in the days of the pit you could do. No, it's
There's
far
so much
beyond
going
that.
on right now that you can miss one thing and you're aggravated.
Right. Yeah, and you see, look at gold was up at 1690. It came right back down to some great levels. So you could sit and lament. No, this is what they did. They brought you that, and that's why I'm kind of looking at the silver here. I'm thinking in terms of the poor man's gold, but but more importantly, and this is what you state, there's so much liquidity running around the world, and nothing says it more than the Swiss National Bank making $50 billion last year. $50 billion on money they truly created out of thin air.
It's a beautiful thing.
So it is a beautiful thing. You know what? It's great work if you can get away with it. But if I was running that Swiss bank, I would be in a diversifying mode, and I wouldn't be diversifying into any sovereign debt. Because I listen to people go, why would you go chase buying bonds, chasing yields here, when you're telling me, well, and then you get people coming out, well, there's some inflation fears, which is why, of course, the tips are being bid. Well, why would you chase a 5-year yield down to 75 basis points? Are you out of your friggin' mind when you're telling me inflation on the measure that you created is 1.6? So you're asking me to buy something that is inherently depreciating as soon as I buy it. It's like going to buy a Rolls Royce and driving it off the lot and deciding 6 months later, I don't really want this, and go and see what its value is, right?
Pretty much.
Yeah, that's what it looks like to me too. All right, have a good day. Chew it up. Again, let the questions, as Mao would say, let 100 questions bloom. Sorry, Mike, for bringing up Mao. Don't hate me for it, but
No, did you see?
women.
Did you see the guy from Strategas on Bloomberg this morning? They must have booted him
No.
off NBC. The technician.
Why?
Well, because he just got on Euro Gold, Yuan Gold. What? He finally went back and listened to what you've been talking about for the last year.
No, but I'll tell you who was funny this morning, because I have Bloomberg. I don't get Bloomberg radio, television, because I have down here in Arizona, and I get Cox, and they don't have Bloomberg as an offering. So, and I haven't even been listening to CNBC, so I put on Bloomberg radio. But they had Liz Ann Sanders on with Tom Keene, and she actually embarrassed all Bloomberg. She says, "Oh," because she was talking about what should they, some blowhard trying to sell something with an idea on Bloomberg radio, and Tom Keene was like flabbergasted, because she said it exactly right. They roll out people, and I know they have to fill airtime, but she just blasted them. Not Tom Keene, but the people who they roll out with whatever idea fills their head. And listen, you can accuse me of that too, but I'm telling you ahead of time, I'm in the dark recesses of my mind. You want to look at there and go have a look, It's kind of fun though. And again, let's get out the scotch and really enjoy ourselves.
All right. Well, thanks, Ira.
Okay. All right. Be well, guys. All right. Bye.